Now, the FNB Property Barometer points to improved housing market conditions in South Africa during the first quarter. In February, the lender's house price index averaged 0.7% year-on-year, a touch lower than January's 0.9%, a depreciation trend that is expected to continue. And the group's base case view suggestions that the housing price cycle has bottomed. And in the meantime, a gradual decline in inflation and borrowing costs is expected to boost housing market appetite in the second half of the year. And property analyst at FNB, John Loos, joins us with more insights into the local residential property market. John, always a pleasure and a good afternoon to you.
Good afternoon. Thank you for having me.
All right, John, it looks like we have seen a bit of a sideways movement in housing prices that was in line with expectations. But let's just speak about the trends that are emerging here in this time, and also what's driving those trends?
Well, if one looks at a few of the estate agent survey trends, which are more leading indicators, what we've started to see for a few quarters now is a gradual uptick in the sales activity rating. So that's what the agents surveyed experience in terms of sales activity. It's 5.8 now. This is the third consecutive quarter of rise. Some of it might be seasonal, but it seems like it could be a bit more than that. And the average time on the market at 10 weeks and 6 days in the first quarter has also declined from 3 quarters ago, 12 weeks and 1 day. So these are interesting early signs from estate agent surveys that the market might be starting to strengthen slightly. I think the key driver of this is probably the likelihood that we've had the peak in interest rates. Interest rates stopped rising in May last year. They've been moving sideways. There's a widespread expectation that the next move in interest rates is down. And I think that increased optimism might just be starting to fuel some buyer demand, which we're not yet seeing in house price growth at 0.7%, but that's okay. House price growth generally lags demand trends. First, you get an increase in demand, and a number of months later, you start to see an acceleration in house price growth. So that's not unexpected. So I think that's more our estate agent survey where we're seeing the early signs of possible little bit of strengthening in the market.
I must also ask you, John, the reality that many South Africans haven't seen real income growth, over the last few years, has that had some sort of an impact on the residential property market?
No, I think so, definitely. I mean, that coupled to the very significant interest rate hikes up until May last year, from late 2021 till up until May last year. And of course, higher inflation a while back. It subsided now, but there was this food and oil price inflation spike. Definitely exerted some additional pressure on households. And just to give you an idea, in the surveys a quarter or two ago, the estimated percentage of sellers selling to downscale due to financial pressure was as high as 24%, wow, estimated by agents. That also has subsided now to 19.3%, which is another good sign. But no doubt, during that period of interest rate hiking and slower economic growth, there was significant pressure, additional pressure on the households compared to go back just after lockdowns when interest rates were down at 7%. That was a relatively strong time in the market. So the market is still weaker than then, yeah.
Then I must also ask you about the relationship between a buyer's market and a seller's market, and if there's any, difference in the two. Of course, we will possibly see, like you're saying, if interest rates start to fall in the second half of the year, more people willing to buy. But will there be people who are willing to also sell? Do the two kind of move in correlation?
I think to an extent they do. I think there's a portion of sellers who aren't under financial pressure, who aren't in a hurry to sell, who would wait for interest rates to decline and for the market to perhaps be a bit stronger. Because, in big markets such as Gauteng, it's been very weak during this period of interest rate hiking. Western Cape a bit different, that's been a bit stronger there. But certainly I think for those who are not under financial pressure or desperate or in a hurry to sell, they would typically wait and come out in greater numbers and put their houses on the market in a better market time. So I think that would come. And obviously on the demand side, yes, many buyers who are credit dependent would wait for interest rates to decline before buying. So I think the two do to an extent correlate, yes.
John, does political uncertainty impact residential property markets?
I'm not convinced that there'll be major. Look, political uncertainty is an ongoing thing. I mean, if you look at local governments already in the major metros, we've gone into coalition governments, which do create a lot of uncertainty. That's been around for a while and it's not going away. If you look at the opinion polls, some opinion polls would suggest that we might be, in certain big provinces and even at national government, there's a likelihood of coalitions there too, which adjusts and increases uncertainty. But I'm not sure. I think for most homeowners, it's largely business as usual. I need a house. I need a place to stay. I believe in home ownership, and interest rates are going down, so I want to buy. I think that the cycle would be more correlated to the interest rate movements, which is normal, and that later in the year we do expect some reduction in interest rates, and that will fuel some additional demand in the residential property. I'm not convinced that on the residential side, at any rate, that a lot of people would be waiting around to see what happens with the elections and so on. I'm not sure that that's a major influence.
Then I must also ask you about the issue of, I think, service delivery. You touched on it a little bit, and I'm wondering if that might also be something that we have to contend with when we do see the housing, the residential property market open up a little bit. Water, electricity, we know that we've seen this solar boom, for instance, which is, I think, one item. But in Johannesburg, we've started to face water issues. So we're seeing JoJo tanks being brought in, boreholes are being dug. Does that generally have an increase in property values, John, something that is quite material?
Look, I think I think with water, perhaps water alternatives, the JoJo tanks and the additional supply, possibly that could have a slight increase in values. On the solar power side, when it comes to power, that's a tough one because at the moment the technologies are improving all the time, so it can go either way. It can be that someone puts solar panels on their house. A year or two later, the technology is outdated. There's newer technologies, and then maybe the aspirant buyers are more interested in the newer technologies than the older ones. So that's a hazardous prediction to make that it will impact positively on property values. That would probably come more when technologies have settled and reached some sort of optimum. At the moment, we're probably not there yet. So it's a difficult one, but yes, certainly. In the market, a very significant portion of people have been putting in various electricity alternatives, be it backup supply or solar, for instance, some getting off the grid even, and water in places like Johannesburg. Yes, it's starting to become more of a concern. So those alternatives are growing as well.
Well, John, we'll be watching very closely. Very interesting times ahead. Thank you so much for your time. It's always a pleasure hearing from you. That was a property analyst at FNB, John Loos.